Hello and welcome to today's Taxware webinar entitled Puerto Rico Sales and Use Tax Changes. Before we get started, I'd like to mention that today's session is being recorded and you are currently in a listen-only mode. Now I'd like to acquaint you with some of the ways you can participate. We'll have a question and answer session at the end of today's presentation. You may type a question into the question and answer panel located in the lower right-hand corner of your screen if you have the old version of WebEx. The new version is on the top. Then click Send on the button to enter your question into the queue. We will answer your questions at the end of the presentation. During today's presentation, we will ask you for feedback via a polling question, and it will appear in the right-hand side of your screen once the poll has been opened. Please click on the radio button that corresponds to your answer to place your vote. You will have 30 seconds for each polling question. This is mandatory if you're here for CPE credits. To download a copy of the handout, please go to the upper left-hand corner of your screen and click File, and then from the drop-down, select Transfer. Once you do, this will pop up a window that the handouts will be available on your screen. Select the file, click the Download button. Finally, if you experience any technical difficulties during today's event, please enter it into the Q&A panel or call WebEx support at 1-866-229-3239 for technical assistance. This leads to today's first polling question of the afternoon. Are you planning to apply for CPE credit for attending today's webinar? A, yes, B, no. Please note that if you're attending for CPE credits, the survey at the end of the webinar is considered mandatory to earn your credits. We'll leave this up for a few moments and we'll go right into Ramon and Carla.
Good morning, everyone. My name is Carla Bajor. I'm one of the managers with Taxware Sales Tax Services Division. And joined with me this morning is Ramon Frias, our Senior Tax Research Associate, specializing in Puerto Rican tax law. This morning's agenda is very full. We will review and discuss Puerto Rico legislation, the background and recent changes. We'll review new reporting requirements, particularly on their new PICO website. We'll also be reviewing and discussing the content of the complementary, also known as the Supplemental Form for Imports for Use, the Form SC 2970, the Form SC 2915B, and Form SC 2915A. In addition to that, we'll also be reviewing the new municipal forms administered by the COFIN. We'll do a general overview of other changes, and we'll wrap up with our conclusion and requirements to be successful in filing.
Well, with that being said, let's get started right away making a little overview about the latest law changes that have occurred in Puerto Rico. As most of you are aware, Puerto Rico started with a very big tax change that was enacted in 2013. Basically, that was the Law 40/2013, that pretty much eliminated all the sales for resales exemptions and that existed under the sales and use tax law of the island. Also, it created a multiple new requirements for taxpayers in doing business in the island. Like it started with a new system that pretty much was going to allow taxpayers to use the credit, to use as a credit the sales tax that was paid on the input that they were purchasing, whether locally or abroad. Also, another very important thing that happened in Puerto Rico was that a number of exemptions that existed for very particular reasons were eliminated or reduced by that law 40/2013. That was pretty much the basic legislation that changed the whole simple sales and use tax system that Puerto Rico had. After that law, at the beginning of this year, 2014, another legislation was approved. Those laws were the 18 and 19. Under the law 18 and 19, they created a new entity called the COFIN under the bank under the roof of the Developmental Bank of Puerto Rico, the BGF, and that entity was called the COFIN. The COFIN is an entity that is intended to pretty much supervise the process of payment of the sales and use tax of the local municipalities of Puerto Rico as a way to ensure the payment of the debt that those municipalities has accumulated during the years. And therefore, this new entity is supposed to be, as we are going to be talking a little bit later, is going to be taking over the collection process of most of the sales and use tax of the locals. Also, that law 18 and 19 of 2014 redistribute the 7% sales and use tax between the Commonwealth and the cities. Probably most of you are aware that until recently, the sales and use tax of Puerto Rico was shared in a proportion of 6.5% for the state. For the Commonwealth, and 1.5% for the locals. The reason why most of you saw that the proportion was instead of the 6.5, 1.5 proportion, you saw the 6% and 1% was because 0.5% of the tax that was going to be collected by the locals was directly collected by the Commonwealth of Puerto Rico through the Treasury Department of Hacienda. So whenever you saw the tax, you said, well, it is 6% for the Commonwealth, 1% for the locals. But the truth is that 0.55% or 0.5% of the sales and use tax of the locals were collected by Hacienda. This law 18 and 19, well, made that proportion, redistribute that proportion so that the amount of the tax collected by Hacienda was going and remained under the pockets of Hacienda was going to be 6%, and the locals were going to be collecting 1%. Excuse me, when I was referring to the 6.5 was 5.5% collected by Hacienda and 1.5% collected by the locals. But the 0.5% was collected by the Treasury of Puerto Rico on behalf of each local, and that was going to be feeding a fund intended for the payment of the debt of the local municipalities of Puerto Rico. Also, another issue was that this tax postponed the application of the use tax on import for resale, because the Law 40 of 2013 established that all imports for resale were going to be subject to tax in Puerto Rico. Therefore, because of technical problems in the island, they could not establish that new system. And by the Law 18 and 19, that new system of collecting the sales and use tax was postponed until July of this year. Later on, in June 29 of 2014, another law was approved, which was the Law 80, 2014, and according to that law, a lot of new changes were enacted. The first one was the change on the deadline for the filing and payment of the sales and use tax. The second one was that it mandated a second return that was to be applied or used at the time that you imported goods into Puerto Rico. And this is pretty much one of the biggest changes that we are going to be talking about today, because in Puerto Rico, given the amount of goods that are imported into the island, most of the impact of these recent changes have been the fact that business there are required to pay the sales and the use tax when they are importing goods into the island. The third thing that happened with this Law 80 2014 was that it created the concept of bonded business. That concept was not there before in the reform enacted by the Law 40 2013. And basically what that, as we are going to be looking at a little bit later, that created a system by which Hacienda may allow certain businesses to clear custom, the goods imported for certain business to clear custom without paying the use tax that is now due at import level. From the very beginning, I want to remark that when we mention import, we are not necessarily restricting that term to goods that are coming from outside United States. Puerto Rico is part of the United States, and technically when you ship something into the island, or when something is brought into the island, it is not being imported when you are bringing that from any other part from the United States. But by import, what they meant in the law, they mean anything that has not been produced into the island. So either the good is provided, or excuse me, is produced is imported from the United States, the rest any state of the United States, or imported from any other part of the world, they treat it as an import, and therefore it is supposed to be collecting and paying the use tax due for those imported goods. Also, another important change introduced by this Law 80/2014 was that the law mandated the creation of the taxpayer-controlled account by Hacienda. And this is a central part of all these administrative changes that Hacienda is undertaking, because under this taxpayer-controlled account, Hacienda is going to be managing all the credits that are going to be generated for the payment of the use tax that is due now at import level, as well for the payment of the sales tax that are paid when you buy locally something for retail. Finally, it specifies a mechanism for the application of those credit and debits. And pretty much the way that Puerto Rico is moving is that they want somehow to create a system very similar to the VAT system that we have seen in the rest of South America, and somehow keeping the good parts of the sales and use taxes that we see in the rest of the United States. So in summary, by approving those laws that we talked about before, Puerto Rico pretty much wants to keep a kind of sales and use tax system, but with a lot of features that can only be seen in a value-added tax system. With that being said, a lot of people have been saying, well, this is pretty much a VAT system. So, however, if we look carefully to the features of the law and the features that the system has right now, we are going to conclude that there are certain similarities in the system that we are currently going to talk about now.
Okay. As Ramon mentioned, there are a lot of similarities between the Puerto Rico law changes and a VAT system. The similarities are purchases for resale are taxable, taxes paid on input can be deducted from tax on sales, unused credits can be carried forward, and credits are taken and taxes are paid per entity and not per store location. Ramon will now review the differences between the law changes and the VAT.
Yeah, basically in a VAT system, what the intention is to tax all the commercial chain, so that from the very beginning when a good is produced, or even before a good is produced, tax is start to be applied. So tax is applied at the very beginning when you are buying inputs, whether for producing for manufacturing goods, and therefore once you manufacture that good and you sell to the you sell to the wholesaler, and the wholesaler to the retailer, and the retailer to the final consumer. Each step of the tax, each of the step of commercialization is subject to tax on whatever value you are adding into the chain. However, in Puerto Rico, if you take a look carefully to the system, this is not what is happening. Because in the case of the Puerto Rican system that we see right now, taxes. Not all the taxes that you pay in your inputs are going to be deductible at the time that you are about to pay your taxes because of yourself. For instance, in a VAT system, taxes paid on services, inputs, services that you are required for you in order to do business or to sell whatever you are selling in Puerto Rico are usually deductible. But in the case of Puerto Rico, they are not creditable. So if you are producing things, anything, or you have any retail store or business there in Puerto Rico, all services paid on taxes, all taxes paid on services are going to be subject to the tax. However, the tax paid is not going to be deductible from the tax that you are going to be paying due to the items that you are selling. Also, there is another feature in the system of Puerto Rico, and it is that they have established some kind of cap. They have established some kind of threshold of 75%, so that you can only deduct from the sales tax that is due on your sales up to 75% of that total month liability. In other terms, like if you just have if you have sold, let's say, items and the total tax that is due is, let's say, $100, you are only going to be able to deduct up to 75% of those $100 in the credit that you generated when you were importing things and you paid the use tax or the local purchases that you made in Puerto Rico. So Puerto Rico has that kind of threshold, and this applies both for the sales and use, both for the use tax that you paid on the imports, the time that you are importing things into the island, and the tax that you pay on the local purchases that you make for retail in the island. Another thing is that only bonded businesses can credit taxes paid on purchases. So if you are not a bonded business, you cannot credit those taxes on purchases. I mean, you should be duly registered in Puerto Rico in order to be able to credit taxes that you pay, whether on imports or taxes that you pay on local purchases. Finally, it is the fact that the tax paid on imports can be credited against the tax on sale only if you are authorized by Hacienda. What it means basically is that if for any reason you have paid, let's say, a sales tax or a use tax, and you have not made, and that tax is not reflected on the system of Hacienda, you may not be able to deduct that tax. That is particularly true in the case of the tax on imports, that in the case of the use tax that you paid on imports, because in those cases, for whatever reason, whether the system crashes or something like that, you are not able to, I mean, the system doesn't reflect the tax that you paid on those imports, you are not going to be able to deduct them from, the tax that you are going to be paying on yourself.
This slide is showing you the home page of the new PICO website for reporting sales and use taxes, as well as for declaring imports. On the left side of the slide, we have the website address for those of you that may not already have that. And under the registration deadlines noted, please note for importers that are bonded, the registration deadline was July 31st of this year and August 31st for all other businesses. Please note that if you've not yet registered, you may do so. However, the PICO system will not have the import for resale information through customs readily available. That will need to be added separately. Also in the upper hand corner, please note there is the option to translate this page to English, as the default is Spanish.
So the main thing here with the PICO system, I mean with this new system that Puerto Rico has established, is that you need, the first step in all this new chain of changes is that you need to register in this new PICO system, because this is the very core of the new let's say, administration of the sales and use tax by Hacienda, and this only applies for the sales and use tax that is applicable at Commonwealth level. I mean, in other terms, to the 6% sales and use tax. All those changes that we were mentioning before regarding to the subscription of the, I mean, registration of the PICO system and all those other credit and debit mechanisms is only applicable for the 6% sales and use tax applicable at Commonwealth level.
Through the PICO website, you can set up an administrator for the account and list other tasks. And if you are filing for any other entity or business, you can also link those accounts together. You can record, review, and retrieve all of your sales tax returns and payments. You'll also be able to file the import returns needed to clear your goods from customs. That includes the initial declaration and any supplemental forms that may be required. You'll also be able to file and pay the Commonwealth level use tax on imports if your business has not been bonded. And you'll also be able to file and pay the monthly sales tax return to the Commonwealth.
The basic, there are three basic numbers that you will need in order to register in the PICO system. And the first one is that you are going to be required to use the new, your employer identification number. And the second one is the registration number, that is the business registration number that is provided by Hacienda. Also, if you are doing business in the island, and you have any business in the island, you should certainly have been provided with an access PIN. And with those three numbers, Hacienda is going to be able, you're going to be able to register your business there. And with that, Hacienda is going to pull all the information regarding to all the businesses that are located into the island under those two basic numbers. Under the employer identification number and the business registration number provided by Hacienda. So, as you may recall, before we used to have when you are in the process of starting a business in Puerto Rico, you are required usually to register each business by location, no matter where no matter the fact that it could have the same employer identification number. However, under this new PICO system, once you register for the purpose of the sales and use tax, no matter how many stores or businesses you have in the island, all of them are going to be registered under and stored in the system using that single new identification number, which means that Hacienda under the PICO system is going to create something that they call a base location. And under that base location, all your stores that are located, let's say in San Juan, Bayamón, Guaynabo, Carolina, etc., and any other part of the island, they are going to have, all of them going to be joined together for the purpose of the sales and use tax under this base location, where you are going to be managing your credit, debit, payment that you made at custom, or payment that you made as well when you were purchasing goods for resale.
And on this next slide, just to reiterate what Ramon explained, when you are logged into the PICO website, within that system, you can see from the screen how the system has identified store number 1 as being the base location, and it seems whichever the initial store opened was on the island has been designated as the base location, and all the other store locations fall under that. So for reporting purposes, to reiterate, it is no longer based on store location. It is per legal entity and business registration number, and all will be recorded under that base location.
Yeah, let's just only remark the fact that when you are doing business there, let's say if for any reason you have already several stores or more than one store or only one store in Puerto Rico and you decide to open another store there, this system that we have seen, the new registration system under the PICO website, only applies for the sales and use tax. So what it means is that if you decide to open another store in the island, you will need to go through the same system that you have seen before of registering that store as if it was another business. But for the purpose of the sales and use tax, because it is going to have the same employer identification number and the same, probably the same business registration number, a similar business registration number linked to the employer identification number, you are going to be, that store is going to pop up automatically in the PICO system as another entity that you have in the same, as another store that you have under the same entity. So this only applies for sales and use taxes. Again, you will need to go through the registration process that we have seen before, or that you are probably familiar with if you decide to open another store. So now we can go to a very important thing that we have seen before, that we have been mentioning on and off during this presentation, and probably you have heard a lot in Puerto Rico. It is the difference between the bonded and non-bonded businesses.
Okay. Now, first, just for definition purposes, the bond that we're speaking of is essentially a financial warranty provided to the Treasury Department of Puerto Rico to ensure that payments clearing through customs will be made good. The bond will only will only allow your business to clear imported goods from customs without paying the use tax until the 10th of the month. So the bond is not going to directly pay that, it's just guaranteeing the payment.
It's a deferral, pretty much. A deferral allows you to defer to the next term the payment of the tax.
Exactly. To become bonded, your business will need to be previously authorized through the Treasury Department, and it is important to note that if your organization has any outstanding liabilities to the hacienda, that bond issuance will be delayed. The amount of the bond will be determined by your organization, but please note it cannot be less than $10,000. Businesses will determine the amount of the bond based on the goods that they're planning to import, and then that number will automatically be increased by 25% through the hacienda.
Yeah, the purpose of that is that hacienda wants to ensure that in the case that they find that whatever you declare at the import process was not exactly the amount of the tax that was guaranteed by the bond, they want to make sure that you are going to be paying the whole amount of the tax. Also, the other issue is regarding to any kind of let's say penalties that you may apply, that you may be required to pay because of any inaccuracies on your declaration.
Continuing the discussion of the bond, the available amount of the bond will be reduced with each unique shipment that passes through customs, deferring the use tax payment until the 10th of the month. After the payment of the use tax filed on Form 2915D, which we will talk about momentarily, the bond will renew itself automatically. Bonds provided to the hacienda for other taxes are different from the bond required for deferring the import use taxes and should not be considered to be interchangeable. And lastly, the bond provided cannot be used to substitute the payment of the use tax. Again, it only allows the deferral of payments.
So this brings us to the second polling question. Does your company currently import goods into Puerto Rico? A, yes, B, no, C, not currently, but we will, or D, not sure. We're actually going to take a quick change of plan here. I'm dropping this on everybody. We are getting quite a few questions, so I'm going to put us on hold for about 30 seconds just so we can read through the questions, gather our thoughts, and then we'll come back with some of the questions we've been getting. It's a little bit different than we had planned, but we're just going to go ahead and roll with it that way. So hold on just a moment, please.
And we're back?
We're back. We're going to read a couple of quick questions here. What if you do not have a physical location on the island? Are you still required to register and file?
Well, if you don't have a physical location in Puerto Rico, you need to check whether or not you have a nexus with the island. I mean, Puerto Rico has a very, very sticky legislation in terms that they provide a number of conditions that define whether or not you are required to file and pay the sales and use tax of the island, even if you are not you don't have a physical location. I mean, if you are marketing directly there, if you have people in the ground doing business for you in Puerto Rico, you are going to be required to register for sales and use tax purposes, and therefore you are going to be required to be paying the sales and use tax, even if you don't have any store located on the island.
All right, next question. Are you saying that if we are not a bonded importer that we cannot get a credit back for the 6% import tax that we pay?
Not necessarily. What I mean is that if you are bonded, first of all, if you pay the sales and use tax in Puerto Rico, you are going to be able to recover as a credit the sales and use tax that you pay on your inputs. If those are for resale, and you are registered as a reseller. So usually what they do is that the system automatically recognizes the sales tax that you paid on your imports if you are already registered into the PICO system. And once you are registered in the PICO system as a reseller and those goods are for resale, you are going to be able to recover that. If you are not registered, or even if you are registered, you are not registered as a reseller, or the goods that you are importing into the island are not for resale, you are not going to be able to recover any of those credits.
And the last question will be a quick one. Are goods brought into Puerto Rico from the United States considered imports?
Yes, as I mentioned it before, the term that they use there is, I mean, we have been using the term import, and when technically Puerto Rico, as part of the United States, should not, it should not be called imports. It is just interstate transaction, or let's say, well, a transaction between the Commonwealth and the rest of the United States. But the point that I want to remark is that no matter if the good is being imported from, is being transferred or shipped from Florida or from Texas or from Spain or from any other jurisdiction in the world, you are going to be required to be paying the import use tax in the island whenever you are, if the goods that you are importing are for resale, or the goods that you are bringing on for resale.
All right, okay, we'll just get right back into it. We're going to save all the rest of the questions for the end. We got quite a few questions to go through, so we'll see if we can rush through, and hopefully some of these slides will answer those questions.
Okay, so we made a little chart to trying to describe the filing and payment process and that has been happening in Puerto Rico. And so we are trying to explain. After all those changes that were implemented into the island, if you import something in Puerto Rico, the first thing that you should define is whether or not you are a bonded business. If you are not a bonded business, well, what is going to be required is that the tax paid on import is going to be, that you are going to be required to pay the use tax on import before you are able to clear those goods from customs. Once you pay the import tax on those goods, well, you are going to be generating a tax credit that is going to be against the tax due, assuming, of course, from the very beginning that those goods are for resale and you are already registered as a reseller. So if you are not bonded for whatever reason, let's say that you are a business that is willing to pay the use tax right away as soon as the goods, the items that you are importing into the island, as soon as those goods are imported into the island, well, you are going to be okay. You are going to be paying the import use tax using the corresponding form, and you are going to have a tax credit that is going to be against the tax due on your sales. If for any reason you decide, as most of the business there have decided, you decide to become a bonded business and you get the corresponding authorization by Hacienda, then you're going to be filing an import return that is pretty much the form 2970 that we are going to be talking a little bit more in detail a little bit later. And with that form, well, you are going to be authorized to clear your goods from customs. Well, it may happen, according to the system, that if for any reason Hacienda may just grant you the authorization, or Hacienda may say, well, I want to make an inspection of the goods that you are importing so that I can, compare whatever you are declaring against whatever, what you actually imported into the island. So once you do that, you're going to be required to pay whatever difference by Hacienda or reduce your bond, by the amount that Hacienda is going to decide, or the amount that you have already declared at the time of the import. So the way that it works so far is that if you are bonded, whatever amount of use tax that is due on the goods that you are importing is going to be deferred to the next it's going to be deferred to the 10th of the next month, so that you are so that you will be allowed to file and pay the tax due for all those goods that you were able to clear from customs without paying the sales tax in the form SC 2915B. Pretty much that's the deferral that Carla was mentioning before, because a lot of people have mentioned, well, if I present a bond, I'm not going to be required to pay the tax. Well, it is not that you are not going to be required to pay the tax. It is just that you are going to have until the 10th of the next month for paying the use tax that is due on the goods that you are already imported. So whatever amount of tax that you paid using the form 2915B is going to become a tax credit against the tax that is due on your sales, assuming, of course, from the very beginning that all those goods are for resale and you are duly registered in Puerto Rico as a reseller. Once you generate those credits that are going to be already in the PICO system, you are going to be able to file the form 2915A, which is the regular or standard sales and use tax form that is due on the 20th. So on the 20th, you are going to be claiming all the credits because of the sales and use tax that you paid on your imports, and then you are going to be using those credits against the amount of the tax that is due on your sales. Remembering, of course, the 75% limit that we mentioned before, in the previous slide. So once you pay, once you file that form 2915A, all you need to check is whether or not you used all your credit. If you use all your tax credit, well, you are all done. Your bond is going to be automatically restored in full, and you're going to be able to use that bond for importing new things and using that bond to guarantee the payment of the use tax, the sales and use tax that is due on your imports. If for any reason the part of your, let's say that you reach the cap, the threshold of the 75% that we mentioned before, because the amount of the tax that you paid on your import was more than 75% of the amount of the sales tax due on your sales, well, what is going to happen is that the remaining credit is going to be carried forward for the next month, so that you can use all the credit that you already generated because of the tax paid on your imports. So that was the way the system was supposed to work. That is, the system was supposed to work starting on August 1st.
And as Ramon mentioned, on August 1st, the website was supposed to be fully available to allow you to file the declaration. And here on this slide, we have a screen image from the PICO website, where it allows you to enter a declaration for each unique shipment into the island. Unique shipment is defined by date, carrier, trip, and shipment information. There were some issues throughout the month which required that Puerto Rico issue a supplemental declaration. Both are available on the website, so for any shipments that were cleared through customs without a declaration up front, a supplemental will need to be filed. All of that information will then be tracked through the system, provided you are a bonded and registered seller on the PICO system. And our next slide is just showing a visual of the unique import declarations. Import declaration 1, it would have the same bill of lading, same carrier, same import date, same shipment. That would be an example of a unique declaration. For a second shipment, again with the same bill of lading, carrier, date, and shipment information would require its own, and so on and so on. Once these are filed through the PICO website, the hacienda will submit the information through their Customs Clearance Center, and each filed declaration will receive its own unique authorization form. And here you see that import declaration 1, 2, and 3 in our example were issued those clearances, and that information will then automatically populate the 2915D imports for use tax form. It's important to note that this form, although we do have a visual reference to it here on our slide, the requirement that Puerto Rico has issued is that it be filed and paid electronically through the PICO website. They will not, under any circumstance, accept a paper form or a paper check for payment.
So, in the previous slide, you remember now that we showed visually more or less how the process was supposed to work. I mean, that was what Hacienda designed from the very beginning, according to the law and according to the administrative provisions that they issued. And pretty simple. If you were bonded, well, you file the import return to Hacienda. Hacienda provide you an authorization to clear the goods from customs. Once you clear the goods from customs, Hacienda would reduce the bond that you provided by the amount of the tax due. Later on, you just file your import use tax return, the 2915D, on the 10th of the month of the next month. With that, you generate a credit. With the credit, you therefore then once you generate a credit that is going to be on the PICO system, you would file later in the 20th of the next month the sales and use tax, where you are going to be reporting all the tax due on yourself, and you would be able to reduce that amount of the tax by the amount of the use tax that you paid on your inputs on your purchases for resale. And as we mentioned before, well, if you were able to use all your credit, your bond would be right away restored in full, and if in the case that you didn't, well, you would be carrying forward whatever remaining amount of the credit. That was the idea from the very beginning. However, it happened to be that that didn't happen because the PICO system crashed during from the beginning from August. So the first step in order to make the system work, well, didn't work. They couldn't be taken, and therefore Hacienda needed to come with a solution that we are going to be explaining right now. So what happened was that basically Hacienda created, because the PICO system was not functioning, was not allowing people to submit the import declaration that we were mentioning before. Hacienda, in view of that situation, authorized to all businesses, both bonded and not bonded, to clear all the goods that they have in customs, so that all those perishable goods and all those things were able to be taken from customs the same way they did before in previous months. I mean, without paying any sales and use tax. So once that Hacienda enacted that provision, allowing everybody to clear all the goods from customs, well, they later on realized that, well, if those goods that were imported into Puerto Rico were not somehow, if the information regarding those goods were not introduced on the system, they were going to have a very big problem. So as a result of that, Hacienda enacted the administrative determination number 1420, by which it requires all businesses that got an automatic authorization of clearance to file a complementary or supplemental import return. And pretty much that with that return, Hacienda may or may not in the future order an inspection, but so far it has been, it seems to be that Hacienda is not going to be examining anything immediately regarding those goods that were imported during the month of August and were granted with an automatic clear, with an automatic clearance for the purpose of the sales and use tax. So once you decide to file that supplemental or complementary import return, the first thing that you need to check is whether or not you are bonded. Because according to that provision, according to that administrative determination, if you are not bonded, you are going to be required to file the sales and use tax that is due for those goods that you obtained without, that you cleared from customs without paying the use tax right away. This is not the Form 2915B. This is a new supplemental form that Hacienda has been requiring to all businesses that imported goods into Puerto Rico without paying the sales and use tax at the moment that they were clearing those goods from customs, assuming, of course, that those goods were subject to sales and use tax. And they were also, of course, imported during the month of August. So if in the case that you were a bonded business, that you already were authorized by Hacienda, it is going to happen something very similar to what we saw before. Hacienda is going to compare the amount of the bond that you provided to Hacienda for guaranteeing the payment of the sales and use tax, and if you have available funds in the bond, well, you are going to be allowed to submit that complementary import return or import declaration without paying the sales and use tax at that moment. With that, once you file the complementary import return, you are going then to be required to file the Form 2915D. And basically what Hacienda has mentioned is that that complementary return is intended to work as a substitute for the commercial invoices and all the other documentation that we are going to be talking in a little moment at the time that we define what are the conditions for you to file those complementary import returns. Once you file once you file the Form 2915B, you are going to be generating the same tax credit that we mentioned before. It is important to remark that complementary import return is due today. Hacienda has required for all businesses that obtain it were allowed to clear customs without paying the use tax to file that complementary import return on or before the 10th of the month. It means today, so that all businesses that for some reason were allowed to receive those goods are required to file that complementary import return no later than today. And also, well, they are going to be required to file the import use tax return, that is the Form SC 2915D. Both forms are going to be required because, as a matter of fact, one form, the information that is fed into the first form is going to be used as the basis for the second form, which is in this case the Form 2915D. So, in summary, you are going to be required to file both forms no later than today if you, for any reason, imported something during the month of August. Once that credit is generated, well, you are going to be required to file the same Form 2915A that in the 20th of this month, and with the credit generated, if you use all the tax, you are going to be, your bond is going to be returned in full, and you're going to be able to import new things without paying the sales and use tax at the moment of the import, and then once that is once that bond is restored in full, you are going to, your process is going to conclude. If for any reason you have any credit, or because of the 75% limitation that we talked about before, you are going to be required to carry that remaining credit forward to the next month.
All right, question 3. This brings, has your company already created an account on the PICO website? A, yes. B, no. C, not sure. And once again, back to the moment product.
On the next slide, once you've completed your CPE question. Just to do a quick recap of the supplemental import declaration. Again, it should only be made by those businesses who obtained automatic clearance during the month of August. It must be submitted through the PICO system on or before September 10th, which is today. This will substitute the commercial that was required via the PICO system. Again, for site system issues, it has been substituted. And along with the supplemental form, a PDF document with the identification number of the bill of lading, the date of imported goods, carrier, seller, date information, and all the details that would normally have been provided on the initial declaration must be included. Any non-bonded importer would be required to make immediate payment of the use tax, and payments will be required to be made via ACH debit. However, bonded businesses requiring payment may present it against the bond if one had been issued by the hacienda. On our next slide, we have, again, a very similar slide to the one we saw before. The information is essentially the same. It is a declaration. It will require a customs clearance at some point, and that data will automatically flow to the 2915D form, which again is required to be filed online. This next slide and the slides thereafter just highlight the different sections of the 2915D form, taxable imports for use, eligible reseller details on lines 4, 5, and 6, and in section 6 you are allowed to identify the exemptions for import.
Yeah, and here I just want to remark a very brief thing. It is important that you use the correct, at the time that you're importing something into Puerto Rico, given these new regulations, it is important that you keep very close eye to the classification that you provide for those goods that you are importing into the island. Because if for any reason those items are not properly classified, they may not be recognized. Hacienda may not allow you to let's say, apply whatever import you think that you are allowed to apply into and once you make those imports into the island. It is very important to use the proper classification of those numbers under the customs regulations, so that you have you are allowed to get all those exemptions that the sales and use tax still grants.
And from there, we are brought to lines 8 through 17, where you would list the amount subject to tax down through any amounts paid in excess. And again, all of this should, in theory, be populated by the PICO system based on the declaration filed. And on the back side of the return, you will see the payment options to be checked off. And again, please note, ACH credit payment option is available only to bonded sellers. This next form is the 2915A, which is a change from the original 2915 and is now due on the 10th. Again, this form must be filed through the PICO website. It is an electronic form only. Our next slide excuse me, shows sections 1, purchases of products for resale, and any inventory to be declared. The sale of tangible personal property is line 3. And my apologies for moving so quickly. I know we're getting close to the hour, so I just want to make sure I highlight all sections for everyone. Next slide is the amount subject to sales and use tax, along with any credits available from the sale of merchant property, credits from bad debt, the tax liability, and any credits for taxes paid by the merchant on the import for inventory for resale. And that is the section that any excess tax paid from the 2915D form can be carried over as a credit not to exceed 75%. Any excess will be rolled over for future periods. Section 19, credit for taxes paid between merchants for purchase of inventory for resale. From lines 26 down through 34, you have your interest, surcharges, penalties, carryover credits, et cetera, et cetera.
So now we have the new forms that are going to be used at local levels. And you know that, as I mentioned before, the COFIN is going to be administering the sales and use tax of the locals that previously were under the administration of Hacienda. Those locals were 17 municipalities. However, one of them, especially the municipality of Bayamón, decided to go ahead alone and set up their own system for collecting the sales and use tax. So the COFIN started some kind of pilot program by which they started to collect the sales and use tax of those local jurisdictions. They are going to be using the same form. The only difference, as you can see, are going to be basically you have two basic differences. One in that form is going to be the name of the municipality, and another one is the municipal code that is assigned to each municipality. Other than that, all the forms are going to be exactly the same. And for this month, they are going to be using the paper form, but starting the next month, they are going to be using the register for the purpose of the payment of the tax. It is going to be online on the website that is going to be set up by the COFIN in Puerto Rico. That's going to be, this is the other side of the same form, and pretty much they are all going to be exactly the same coding, absolutely the same thing.
This slide right here is just identifying what the prior reporting requirements were prior to this filing period. The 2915 had been administering those locals that were handled through the Hacienda, and all those locals which already had its unique form. In today's present state, as of the August 2014 filing period, we have the 2915D, which is due on the 10th of each month to declare imports for use. And we now have the 2915A, which is due on the 20th. Again, both forms are to be filed per legal entity, not per store location. They must be electronically filed through the PICO website. And the Hacienda is no longer administering those municipalities, which they had been previously. As Ramon had mentioned, those locals are now being administered through the COFIN, with the exception of Bayamón for current and future anticipated periods, as they do have their own website, which from personal experience I can say has been working out quite nicely. And there are no changes to the reporting requirements for those municipalities which had already been filing on their own unique form.
The only one thing I want to mention is that for the case of the municipal sales and use tax, this municipal sales and use tax is paid by local, by store. I mean, not by entity, as we saw in the case of the Commonwealth. These local forms should be paid by each store that you have in Puerto Rico, not by entity. That previous system that we saw before only applies for the Commonwealth. Also, another thing that is worth to mention is that for all those locals that were previously under the administration of Hacienda, the deadline for the for filing the sales and use tax for the stores, for the sales of the made by those stores located in those municipalities is the 20th of each month rather than the 10th of each month.
However, just to add to that, those locals have informed us that they do prefer to have their returns and funds in hand by the 10th as they had been. So that would, of course, have to be a business decision, but it is something to keep in mind that the preference does contradict the law.
Okay, so
right, and then the last few slides are just quick recaps of the changes we've discussed this afternoon. The returns must be filed through the PICO system. Organizations with imports for resale must declare a declaration prior to submitting the 2915D form. The D form will be due on the 10th of each calendar month for the prior period and will reflect the deferred payments through customs. The A form is now due on the 20th of each month and will roll over those credits paid on the D And again, the D form is not applicable to all taxpayers, only those organizations which had requested and have been granted a bond issuance for deferring payments. And lastly is just a quick checklist on what you would need to be successful for proper filing each filing period. We thank you all for your time and attention this afternoon, and we will now take questions.
So we've got one more polling question, and then we'll go over a few things, and then we'll be all set. Last polling question. Do you feel your company is ready to process returns for Puerto Rico? Yes, no, or unsure? While you're answering this, I'll go over a few quick things. The webinar will be available on Taxware.com over the next few days, I believe hopefully by the end of the day tomorrow. You can also download the PDF of what we've gone over today. If you hit Control-T, you'll be able to download it there. We've got numerous questions. Normally we would go into a private room and discuss a few of them real quick, but I've got a few of them written down so we can get right into them while we have a little bit of time. Ramon, how is this the taxes being paid? Is this strictly for ocean carriers, and or does this also include air carriers like FedEx, UPS, and all of this stuff not going through customs?
Yeah, the use tax is required for, no matter the way that you import something into Puerto Rico, you are required to file and pay the sales and use tax, the use tax on those imports. If you are importing taxable things into the island, you are going to be required to pay to file and pay the sales and use tax together with your Form 2915G. If you are a bonded business, and if you are not a bonded business, you are going to be required to file as well using the Form 2970.
Okay. Are non-bonded businesses required to file import of use tax?
No, because if you are, excuse me, yes, of course. Because the way it happens is that if you are not bonded, you are going to be required to pay the sales and use tax before clearing your goods can clear customs. So as soon as you import something into the island, you are going to be paying the sales and use tax the use tax on those imports if you are not bonded. That's the simple way that they have set up the system. You are not bonded, you pay in order for you to get whatever from custom, whatever you imported there. You are bonded, you have until the 10th of the next month for paying the use tax.
Is the PICO system up and running right now, the website?
As of this morning, yes, it was up and running.
So we are getting numerous questions still. We're going to hold off on answering some of these. We will go through every question and answer them. There'll either be a follow-up webinar or we'll just do a Q&A PDF to send out to everybody who attended. There's quite a few questions. Again, the webinar will be available Taxware.com. And if you please fill out this survey so we can know how we did and we can get better for the next survey.
I just want to ask a final question that because of time we're not able to mention. Puerto Rico is about to enact a new regulation for the sales and use tax. And basically, this new regulation is huge. I mean, what they did is that they took all the administrative determination, all the rulings that the Department of Hacienda issued, and made a huge document that is supposed to take in consideration all those previous regulations and the fact that they have already a new tax code with a new provision. So be aware of that and watch out for that new regulation because it is already posted on the website for questions of the website of the Department of Hacienda in Puerto Rico. But take a look at that because there are, as it has happened before, there are a lot of new things that come into those new regulations, even though they are not law, but they have they make important interpretation of the law.
All right. On behalf of Ramon and Carla, thank you very much for attending. Again, if you ask a question, we will do our very best to reach out to you with the answer or point you in the right direction of where you can find the answer. Thank you very much and have a fantastic day, everybody.